USDA out with the World Ag Supply Demand Estimates Report. It's called a WASDE report, and the report now out for the month of July. How about we kind of jump into the numbers here, and we'll start with the first one. This is U.S. ending stocks, and this would be the 25-26 season. That 1.6 billion bushels for corn. You'll see that's below the average trade guess. Beans at 310 is above the average trade guess. It's important to note all of these did fall right in line with the range of guesses, though wheat was a little lower. Over to the U.S. production numbers here. The number here was actually below the average trade guess just slightly. The average trade estimate 15,729 and USDA said 15,705. On the yield side, 181, pretty much in line with what the average trade guess was. On bean production at 4.335, so again, a little higher than the average trade guess, and then 52.5 on the yield for soybeans. As we go to world crop production, this would be the old crop, and the number there, these are really pretty much right in line with the average estimate. 132 on Brazilian corn, beans 169.50 on corn, and soybeans at 50. And finally, the world grain ending stocks numbers actually below for corn, soybeans, and wheat, below the average trade guess. But as I scan across there, everything really within the trade estimates. So how do we trade it, and what do we pull from it? That's when we go to Chicago. Oliver Slope, Blue Line Futures. Okay, Oliver, now that we have these numbers, I think a couple of things jump out at me, but I'm curious what jumps out at you.
Well, as you had mentioned, a lot of those numbers came within the range of expectations, although I would note that a lot of those numbers were below the average analyst estimate. So as you're kind of reading through some of those numbers, the U.S. ending stocks in particular, where you see the corn number come in at 1.66 billion bushels, well below the average estimate of 1.722, you would think that the corn market would be able to respond a little bit more friendly. However, the initial knee-jerk reaction, new contract lows just by a tick, 411.5 in that December contract. We are coming off of that a little bit, but nonetheless, you would think that the market would be able to respond a little bit more favorably. And I think the big question mark is that what is going to be the bullish catalyst from here on out? The ending stocks was still in line with expectations. There was no change to yield, which yield doesn't really get changed in this report as it is. Last time the USDA changed corn yield in this report, 2003. So I think the market's quickly digesting this information that was put in front of us here today and is moving forward to weather, and weather continues to be pretty darn favorable for a lot of areas. There is some growing drought concern in some of the top producing states like Illinois, but all said and done, crop conditions do remain relatively elevated and in good shape based on historical standards. So I think some of the selling pressure that we see might just be on the back of no real concern over weather going forward. And talking about weather and how the market responds to that this time of year, the last 7 Mondays, we've seen a lower close in corn with kind of benign weather over the weekend. So that's going to be something to keep a close eye on moving past this report.
Hey, I threw the cotton numbers up here, Oliver. The trade guess and looking where we actually came in on USDA on 25, 26 ending stocks, actually above the trade guess. And then you drop down into world ending stocks, was above the trade guess down there. Is that a surprise really for the cotton market?
I don't think it's a huge surprise. The cotton market has been, under a lot of pressure and just really hasn't been able to get much going here as of late. I think one of the things that's going to maybe help cotton going forward, or at least be a big hot topic and talking point in the future, is whether or not we're going to be able to get some sort of trade negotiation with China. There were some positive headlines this morning from the Chinese delegation saying that they wanted to take some steps and move things forward. So I think, again, kind of moving through this report, nothing really outside of the range of expectations in a significant manner. A lot of this is going to turn back to weather and potential trade negotiations going forward.
Okay. And again, as we talk about China or any of these numbers, again, stepping back and looking at the export side of it, what do we need to be watching? What will you be watching for on the export side?
Well, the demand continues to be very, very strong for the corn market. And today's report, I think, indicated that with the ending stocks coming in below the average analyst estimate. Weekly export sales this week were above the top end of expectations again. So the demand side really needs to continue to stay strong. I think the concern coming into this report is that maybe the USDA was going to price in some cancellations into the end of the year. And that doesn't seem to be the case right now. So the corn market, all in all, looking at these numbers, zooming out, you'd think that the corn market would be able to rally on the back of some of these numbers. That certainly isn't the case, which leads me to believe the market's still just trading weather and good conditions right now for much of the Midwest.
Okay, Oliver, hang on. We'll take a break, come back, and talk about some other markets that are moving right now. Market day report continues in a moment. Down 55. Let's bring back in Oliver Slope, Blue Line Futures. It seems like a quiet day for cattle.
It seems like a quiet day after yesterday's kind of whipsaw action. We obviously had the gap higher yesterday and then traded lower and kind of settled right in the middle of the day's range. One of the things that I took away from yesterday's trade was just the fact that the notional value of this contract has gotten so big. I mean, the full contract value is so much higher than what we're used to. These swings seem very wide. We saw $8.22 range in feeder cattle yesterday. But when you zoom out and look at it as a percentage, that's only 2.5%, which isn't very wild. So when you compare that to other markets like corn, that's a 10-cent move in corn, that's a $1.50 move in crude oil, and about a $2.25 move in lean hog. So on a percentage basis, these are fairly normal swings. It's just a lot more money flying around, which I think makes position sizing and risk management more prudent than ever to be able to kind of withstand some of these moves if the market were to reverse and trade back lower. But right now, cash market continues to remain very, very strong. That continues to be a big fundamental cornerstone for the market.
Yeah, and again, asking 230, south, north 240. Oliver Slopes with Blue Line Futures. We'll see you back here next week.